Alrighty, what is going on, everybody? Welcome back to another Agix fundamental video breakdown, keeping you guys in the loop with what's been going on in risk assets and fundamentals across the board surrounding US dollar strength. So what's been going on in the last 24 hours? We just saw ETH hit $3,000 per coin. Other assets across the board flip bullish. Our callouts on Hbar have fully come into fruition. Our callouts on Agix hitting 75 cents have come into fruition. So what's been happening? Well, in today's trading session, the US dollar index experienced a modest uptick to roughly around 104.100 before retreating on the day. Initially, this was supported by a favorable report on weekly jobless claims, which strengthened the US dollar at the beginning of New York session trading hours. However, as the day progressed, the index gave back its gains, retreating to around 104.00 to around 103.9, where it currently stands right now as of time of recording this video breakdown. And this was amidst a backdrop of mixed economic data and divergent performances in key sectors. So what am I talking about? The PMI data. The PMI data unveiled a nuanced approach and picture of the US economy. While the US S&P Global Composite PMI dipped to 51.4 in a flash estimate for February, down from 52 in January, signaling a continued expansion in private sector business activity, albeit at a moderate pace. The S&P Global Manufacturing PMI showed improvement, climbing to 51.5 from previous ratings of 50.7 over the same exact period. Conversely, the S&P Global Services PMI edged lower to 51.3 from 52.5. Notably, the survey highlighted an easing of cost pressures for both manufacturing and service providers in February, with input prices rising at the slowest pace since October 2020. This narrative initially provided support for the dollar. However, sentiment shifted in the later half of the New York session as the remarks from Federal Reserve speakers or Fed officials, notably Vice Chair of the Board of Governors Philip Jefferson, suggested optimism regarding inflation progress and hinted at the possibility of rate cuts later in the year. This temporary dovish stance by Fed speakers fueled the intraday investor appetite for risk assets, underpinned by expectations of lower interest rate environments in the near future. Remember, that has been the narrative driving risk assets since pretty much late October of 2023. The narrative that in sometime in 2024, the Federal Reserve is going to cut interest rates. The market's overall reaction to this was that risk assets, after a slight pullback at the beginning of New York session with initial dollar strength, flipped bullish, with the cryptocurrency market reaching $2 trillion, marking a 2% increase from yesterday's slight downturn. The S&P 500 notched up to a new all-time high, while the Nasdaq Composite surged over 2% during the New York trading session. Shares of NVIDIA Corp, or NVDA, particularly stood out, surging by more than 10% following an upbeat earnings report, further bolstering the optimistic sentiment pervading the entire risk asset class. So, given the market wrap up, I hope that keeping you guys in the loop with what to be paying attention to via fundamentals has helped you guys out, paying attention to US dollar strength, seeing that initial strength at the beginning of the session, but then seeing dollar turn around during the later half of New York session, bolstering risk assets. Hopefully you guys prevailed and prospered from some of those callouts that we made publicly, not only on YouTube, but also on X. We will keep you guys further in the loop next week. Make sure that you guys are following us across all social media platforms, the X space, over on our new TikTok and our new Instagram, and also on YouTube. Many blessings to you guys. Be cognizant, be aware out there, and I'll see you guys in the next video breakdown.